Welcome to Investors Insights. Our topic today, tariffs, taxes, and earnings. Oh my. Yes, we had to throw that in there because we've got three great topics for you this morning, and I think you will find it very beneficial. Also give you insight as to how we're looking at portfolio strategies and financial planning here at Five Plan Partners. I've just come out of a great meeting with my distinguished colleagues, Bobby Norman, Trey Booth, and Ty Miller. Guys, it was a great discussion, dialogue this morning. You did a lot of fantastic research over the weekend to bring us up to date this morning. So why don't we start off here? Okay, Bobby, taxes is always a topic people are very interested in. And I think, though, you've got something about taxes to talk about that people especially will be interested in. Tax refunds. Talk to us about that.
Yeah, I've actually got good news in how it relates to taxes. So we have been talking about the significance of tax refunds this year for a few months now. And this week, we're expecting refunds to really pick up. And we talk about the significant impact that consumer spending has on the economy and stock prices. So we're following the refunds carefully to hopefully see consumer spending increase. And as you can see from this first chart, 2026 is already shaping up to be a really good year for tax refunds due to the recent tax legislation. So tax refunds are up about $3 billion through this past Thursday. And so this 17% growth rate is strong, but it's actually a little bit slower than we had been anticipating. However, you can see in this next chart, looking back since 2023, we are just at the start of the process here. So tax refund season really begins to take off this week and continues through May. And you can see that this year, highlighted in red, refunds are already tracking better than previous years. And this matters for the market because we are seeing rates come down. At the same time, we're expecting a big increase in tax refunds, more money in people's pockets, which will hopefully drive spending, which in return should help corporate profits, which that obviously helps and creates a healthy stock market. So we're watching refunds carefully starting this week.
Yeah, and I think in this vlog, we're one of the first ones bringing this up. And so I appreciate the way you looked into this information. We all can be patriotic, like to pay our taxes, but it's nice to see that tax refunds could come back to the public and the taxpayer. So, Trey, another topic this weekend, I had a lot of conversation with people as I attended different events, was tariffs. A lot of decisions made about tariffs, and talk about the impact of the Supreme Court decision in relation to what's going on now.
Yeah, absolutely. Yeah. So on Friday, after months of debate and discussion, the Supreme Court ruled that the Trump administration's use of IEEPA, or the International Emergency Economic Powers Act, IEEPA for short, was unconstitutional. And that was not, the Trump administration did not have the power to use tariffs. Now, IEEPA is a constitutional power. It's normally used for sanctions and embargoes. The Trump administration using it for tariffs was the first time it had ever been used for tariffs. And tariffs are a tax. And so the Supreme Court ruled that the administration cannot use IEEPA for a tax. Now, that doesn't mean that administration can't impose tariffs. Tariffs are legal, that Congress has given the executive branch the power to tariff, but not through IEEPA. So what happened quickly over the weekend is the administration shifted from IEEPA to using what's called Section 122 to impose across the board 15% tariff on countries to replace the tariff revenue loss from IEEPA. Now that means tariff rates went up for some countries, down for others. They'll also use Section 301 and 232 to impose more continuous tariffs and more country by country specific tariffs. Also to mention any tariffs that were in place on a specific industry or commodity, like a steel tariff, aluminum tariffs. That was not involved in IEEPA, so those remain in place. The tariffs that were in place for China since 2018 were used Section 301. Those also remain in place. So this ruling was very impactful. However, the administration is working quickly to put that into place using these other sections to keep the revenue roughly expected the same. So the Treasury Secretary, Scott Bessent, came out and said they expect 2026 tariff revenue at the Treasury to match 2025. It's just going to be a lot more complicated. Why the administration chose to use IEEPA as a unique way to tariff instead of these other convoluted ways from the beginning that have been proven, is anyone's guess, but that's where we are right now. Bobby talking about refunds, and that is something that is very important here. Corporations are filing with the court to get refunds for tariffs that they paid under IEEPA. That is not clear to court to not speak on refunds, so that's going to be litigated probably for months, potentially even years, as that fight goes forward. But nonetheless, all IEEPA tariffs going forward are now reversed, and that so far that's about $130 billion in IEEPA tariffs that have been paid. That's why companies obviously want that money back. If you went to Costco and paid for a product that had tariff, I don't think you should expect a check back for the portion of that product. But Costco is going to fight really hard to get that money.
Yes, Costco will fight. Yes,
Yeah.
yeah. They won't put it back as points or cash credit back to you.
I wouldn't hold your breath on that. But so still, in terms of how it impacts the market, still a lot to watch there.
Yeah, no, great insight, and a topic that will continue to be discussed over the coming weeks. All right, Ty. We've been talking about taxes. We've been talking about tariffs. And then a lot of people would go with the changes in tariffs. What are we seeing in corporate earnings? What's the growth of the economy look like? You really drilled down on that this morning and really appreciate the work you've done over the weekend. So talk to us about corporate earnings and what we are seeing in our data.
So there's a lot of noise out there right now with tariffs and taxes and political things, midterm year going on. But it's important to remember that the lifeblood kind of the market is earnings, right? Earnings are what drive growth. And so we have revenue growth and earnings growth for about 75% of companies so far that have reported. Revenue growth very strong at about 8.5%. That's beating the expectation of 6% last, in October, we were thinking that it would be 6%. January 1st, we were expecting 7.5%. We're at 8.5%. And then more importantly, the earnings growth. In October, we were expecting 7.5% roughly. By January 1st, we were thinking 9%. Right now, we're at 13.5%. So really blowing out expectations on the earnings side. Yeah, earnings have been great. That's why, I know a lot of people come to us and say, hey, the market appears to be, valued, pretty highly. What can keep valuations high? Continued growth. If earnings are going to be this strong, then it can kind of justify certain market expectations.
Very much so.
However, speaking of expectations, it's important to note that with great earnings comes higher expectations, right? And so for 2026, our expectations now are of about 14% growth. And then for 2027, another 15% on top of that. Those are pretty lofty standards to live up to. And so that's going to be something that we keep an eye on as earnings continue to come in, as earnings come in for the next couple quarters. What are those expectations looking like? Because that's where you kind of see things ahead of time. You say, hey, we're expecting 16, 15, 20% earnings, and you get something that comes in at 10, which could be a great number. Can kind of disrupt things. Or if you see, low earnings expectations and we can beat like we are now, that's where you can see these high valuations be justified. So that's something that we always have to keep an eye on is not just current earnings, but the expectations of the future.
Yeah, no, that's great to know. And our viewers should feel very confident about those numbers, the kind of growth that we're seeing right now. And we're going to keep you updated. I need to say this. We just celebrated our 21st anniversary, and I'm very proud of these vlogs that we've done over these years. And I'm also proud of the fact that you heard 3 great topics here this morning. You heard about tariffs, taxes, and earnings. We want to keep you updated. We also have a lot more topics to talk about, and we do that through our social media. You need to follow us on LinkedIn, Twitter, on Facebook. Also, Instagram is a new one that we've introduced this year. We like to communicate. We are nerds at the end of the day, full of economics and market data, and we want you to understand why we're making the decisions here at Five Plan Partners. So on that note, we hope you have a great week. Please know we're always available by phone or in person or Zoom to meet with you, but also we're going to have all this information coming out to you as well, because we want you to have as little anxiety as possible. And we want you to know that every day at Five Plan Partners, we are striving to see to it that our clients' lives are better, richer, fuller. Have a great week.